putting on a tax seminar, and we host a show together on the weekend called When Retirement Happens. Of course, he is the president and founder of Legacy Wealth Advisors. Kevin Lloyd, welcome back, Big 550 KTRS.
McGraw, it's always great to be on. Good morning, Kelly.
Hi, Kevin.
So last night we were at the tax seminar at your office at 141 and Seminar, packed to the gills, and the cookies were great. And we both chuckled when the gentleman, you were showing an example, and the gentleman said, "Hey, wait a minute. You can't choose how much money you take in your Social Security check." And you said, "Oh, yes, you can." Explain that to people.
Right, McGraw. We were going over that example when we were talking about, if I have two couples, one couple has an income of $60,000, and the other income has a couple of $60,000, and I asked, if they have the same deductions, same exemptions, is their net spendable dollars the same? And everybody's like, well, maybe, I don't know. And I said, yeah, you're right. It depends, because one couple had $20,000 in Social Security and $40,000 from an IRA withdrawal. The other couple had $40,000 from Social Security and $20,000 from the IRA withdrawal. That first couple paid $3,200 in tax. Well, the second couple with the higher Social Security at $40,000 with an IRA of $20,000, they only paid $70. And he said, wow, that's a lot of difference in tax. But he said, but who has $40,000 of Social Security income? You can't pick how much Social Security you're going to get. And I said, well, you can't pick how much you're going to get, but you can choose when you actually take Social Security. See, when you look at Social Security, there's three major categories that you have to look at. First is your individual benefits. The second is your spousal benefits, and the third is your survivor benefits. And a good strategy is going to utilize all three of those categories. McGraw, I've seen the difference between a good time on drawing Social Security and a poor decision on when not to draw it be the difference of well over $100,000 over your lifetime. And so that could mean the difference of watching every nickel in retirement or going on an extra vacation, and I'd much rather do that.
And so last night you showed examples of how somebody could take their $20,000 a year Social Security check and turn it into $40,000 or some variation thereof with your tax strategies. But I want to get to something else here, and that is this, and we're going to talk about this on the Sunday show. And you brought this up yesterday. It was really interesting. You're a financial advisor. You're a fiduciary. And yet when I open up my statements and other people talk to their financial advisors, they always say, hey, I'm not a tax accountant. I'm not a tax attorney. Please check with your tax advisor for any tax issues. You're a financial planner and a financial advisor. All you do is talk about taxes. How come nobody else wants to talk about taxes, but you do talk about taxes all day long?
McGraw, that's a very good question. I'd love to say that they just don't understand it, but I have no idea, to be honest with you. But I can tell you this: it's difficult to understand taxes and how investments play into everything, and you have to be up on the laws. But I can also tell you that, McGraw, it takes a long time to do these tax strategies for our clients. Okay, so sometimes I have to drive a little out of my way to help my clients save money in taxes. And I feel as a fiduciary, I have to do that. But you got to really look at my industry, and I pick up my industry because we are taught from day one to see as many people as you possibly can see and get as many clients as you can and get as many assets under management that you can possibly get. But the problem, McGraw, is when you have hundreds and thousands of clients, you cannot do these tax strategies. You don't have time. And if you do, you have to pick and choose who you actually talk to. That's why I limit the amount of people that our advisors actually take on, and limit myself on how many people we can take on, because I can only serve so many people. And if I take on a client, I want to serve them to my fullest ability. If I miss out on this and my clients pay more taxes than they should. Shame on me. I did not operate in my fiduciary duty.
So what you're saying is these other advisors just choose not to give tax advice and or tax strategies, where it's part of your business that you actually do. That's part of the cornerstone of your business.
Absolutely, and McGraw, I'd have to say that probably a lot of them don't understand how this works, because, I hear it all the time. It said, my advisor says that I have to pay tax on Social Security. There's no way around this. And I look at it and say, well, I'm sorry, but he's wrong. And the reason is because a lot of them just don't understand the distribution of assets. And a lot of their firms, some of the big name firms that you see on every corner, they tell their people, you cannot give tax advice. And so I take the liability and I say, listen, I'm going to give tax advice, okay? I don't care what other firms do. We do it because we owe it to you as a fiduciary. We hold our fiduciary standard, I think, higher than anybody else out there, because I want to do what's best for my clients. In fact, I own a tax office. I got 5 accountants that work for me. So I'm more than happy to say, okay, this is what the taxes look like. If you do this, you're going to owe this much money, but if you do this, you owe nothing. And I'll tell you, one way to keep your money in retirement is you don't give a third to the government. So remember those 401ks that we've been saving tons and tons of money in that we've been deducting? What if there was a way you could pull some of that money out tax-free?
Yeah.
In our workshop, you saw it last night. The last 2 nights, everybody that was there, they saw how to take money out of 401ks and not pay tax. And that's how we get clients, because no one else is showing anybody. It takes time.
Kevin Lloyd.
They have that strategy.
Yeah, Kevin Lloyd, sorry. Tax, when's the next tax seminar? What do you got for people?
We have a next tax seminar on the 6th of December. I've only got room for like 10 more people for it, and it's filling up fast. I think that's going to be the last one for the year. All
right, so people want to get in some end-of-the-year tax. It's more or less of a general. This is how it all works. It's sort of the beginning foundations on taxes. But I know a lot of people stayed a long time afterwards, asking a whole lot of questions last night. It was great.
They did. It was funny because I said, okay, I'm done, and no one moved. And I said, if you guys got questions, ask them. And it was just like one question after another, after another, after another. And we were probably here an extra 45 minutes just going over questions, because no one wanted to leave. Because, McGraw, we didn't talk about a single investment in there, because I don't think any of that stuff's important. There's no way that anybody can tell you how to invest your money before they tell you how you're going to take it out.
Kevin Lloyd with Legacy Wealth Advisors, 141 and Highway 40, and he hosts the probably the best show on the radio here in St. Louis, called When Retirement Happens. Him and me, weekends here on the Big 550 KTRS. All right, so if you want to register for that no cost, no obligation tax seminar, December 6th at your office, 314-641-1010. That's 314-641-1010, or whenretirementhappens.com. Kevin, thanks for checking in.